Hi, I'm Gary Kim, the editor of IP Business Magazine, and I'm here today with Shrihari Pandit, who is the CEO of Stealth Communications, and we're shooting from the PTC conference for PTC TV. Shrihari, it's good to see you.
Yeah, pleasure seeing you here.
Good. You know, one of the things I wanted to ask you about, it's January 2009 for those of you who are viewing this in 2010 or 2011, and everyone is concerned about the impact of the recession, what it's going to mean for their business, what things they ought to be doing about this. And I may be a contrarian here, but having lived through a couple of these recessions, I look at the numbers. Everyone feels bad, granted, right? But looking at the numbers, I am not detecting that anything really dangerous is happening out there. And I was curious as to whether you're seeing changes in your customer base that have to do with not what they feel, but what's actually happening with the business.
Yeah, this is great. So we service primarily two types of customer base. One's the telecom wholesale carrier base, and the other one's the enterprise base. And from both of these customer bases, we have not seen any real major impact to their businesses whatsoever. In fact, on the other hand, we've seen growth, very strong growth from both sides of the business, from the telecom wholesale and also the enterprises. More than anything else, I think the recession just seems more of an emotional feeling more than anything else. But in terms of them hiring or spending more, we haven't seen any change on that factor.
That's really important. And is this a sort of consistency you've seen for the entire year of 2008, or were there any changes towards the back half is when people, I think, were fearing some sort of slowdown, but most people didn't see it? Yeah,
we actually haven't observed anything. And I think instead we've seen actually a very strong growth more than anything else, especially leading up to the third and fourth quarter of 2008. And just a couple of weeks of 2009, it's been shown pretty strong for us too as well, in terms of sales for data products, like the financial medium product and the voice peering fabric in particular.
Now, in terms of this growth, are you seeing growth in any particular product lines, any particular verticals? What's the pattern there?
So on the voice peering fabric, we've seen some pretty decent growth on that product. So in 2007, we processed approximately just over 200 billion minutes of voice traffic. And in 2008, it exceeded over 500 billion. So on the voice front, it looks very healthy. I think what this tells us...
Healthy on the voice front.
On the voice front, right.
That's interesting.
Well, so I guess it's two parts. Well, obviously the product's successful. It's growing in terms of adding more traffic to the platform. And in terms of that growth from 200 to 500 billion, another way to look at it also, it doesn't necessarily mean that the voice has grown that much, but it could also mean that the transition from TDM to IP has grown very fast. And that's, I think people have been expecting that. We've all been on the path of moving completely to IP, and so with that data, it shows, it is progressing. It hasn't halted because of the recession, and if anything, it's been, accelerating at a pretty decent rate. And on the other front, financial medium, the product that caters towards the financial industry, very similar to the VPF, that allows ECNs and electronic broker-dealers and block shares to buy and sell stocks and so forth. That's grown pretty well too, and in fact, because of the market activity, the businesses have been booming in a major way. It's driven up the amount of transactions in terms of buy and sell orders, and that's generated more demand for bandwidth capacity. So along with us and every other service provider that sells transmission services to this bit of market, it's been phenomenal growth.
So this is obviously, your company being based in Manhattan, the financial segment's really important, and I'm guessing you're seeing a lot more Ethernet traffic coming from that vertical.
Everything is Ethernet. Almost all the financial houses, they want to move to a pure Ethernet basis for transmission. Ethernet over wavelength, Ethernet over dark fiber, or Ethernet over Ethernet type service. A lot of them have already seen the performance enhancements by moving to Ethernet compared to TDM, because when you're routing IP over TDM, ultimately it's converted back over to Ethernet, so you have that serialization and deserialization, and that adds to latency. When you move to Ethernet, it's just IP right over Ethernet. You don't have that extra conversion process that you have with TDM. So for them, by moving to Ethernet, not only are they getting access to more bandwidth at a lower cost, but in terms of the milliseconds, in terms of speed improvements, it's huge. So that means their profitability is there, especially when they have an edge, over others in terms of speed of executing transactions.
Yeah, and normally when people hear Ethernet, they're probably thinking bandwidth, scalability of bandwidth. But for the financial vertical, I'm thinking the latency is probably even more important than the bandwidth.
That's correct. Yeah, 1 millisecond can either make or break, the firm in terms of its success in terms of arbitraging the different ECNs.
So it's actually, in this case, latency is directly related to the core business process, which is we trade.
Correct.
And it's dependent on speed. Latency, therefore, introduces delay, and you don't want the delay. So it's really core business process you're talking about.
Correct. And what's interesting about serving the financial industry is they're not really price sensitive. You know, they care about the performance aspect of it, as you just pointed out. That 1 millisecond, you know, can really help their bottom line. So if that one millisecond does help the bottom line, you know, they're willing to pay, you know, 5 or 10 times, you know, worth that, you know, for that Ethernet service in comparison to what it would originally be worth. So.
Yeah, you know, the financial buyers are different than most other buyers in most other verticals in the sense that I have heard stories, and I believe you probably have too, of enterprise buyers locking up entire routes, entire wavelengths, entire fibers, not for their own use, but simply to deny competitors access to those facilities, in particular because maybe that one route has 4 or 5 milliseconds better latency, and that translates then into trading speed.
In essence, yeah, they're locking out the competition. So yeah, we've seen that too, and that's I guess we would have never imagined that, but by them locking that capacity and depending on the size of the firm and the amount of cash and using that cash in terms of them trading, you know, that could be enormous. So some of our financial firms, just based on the last quarter in terms of the market swings, they've been able to pull in tens of millions of dollars of profitability on a daily basis just because of that. And to the extent that the capacity has been locked up or unavailable to other competitors, it guarantees, you know, those funds. So I guess in terms of them locking up the capacity, it's a small price to pay in comparison to the access to the market, in terms of buying and selling.
You know, on the entire other end of the market, the small business, one of the things you do when you're trying to assess what's going to happen in a downturn or recession is go back in history and see what happened the last time this happened. So one of the things I've been doing is looking at data from payroll firms who are processing paychecks for small businesses. I mean, tens of thousands of data points across the country. And one of the really interesting things is that one of the firms reported that for the entire year of 2008, small business hiring actually went up. The payrolls they were processing were increasing the entire year during this recession. Now, granted, the rate of increase has slowed through the year, but this is one of those data points that people, I think, need to pay attention to, and that is if you are serving the small business part of the business, that segment may be doing a lot better than we think. I was just curious as to whether your carrier partners are discovering any of those similar trends.
A lot of the carriers that we're working with, they're still hiring, but I think at a much more reduced pace. And some of them might have been at a freezing halt. I think for the carrier environment, they have a lot to think about. They're really old or legacy type businesses. And so from a structural perspective, they may not be as efficient as some of the smaller or mid-sized firms. So for the smaller mid-sized firms, they may have a framework that allows them to scale much more efficiently than the traditional carriers until they get to the proper framework / corporate structure. So that's why we're probably seeing growth on that side. But I think the carriers, I think every carrier out there has been through some sort of restructuring in 2008 in an effort to become more effective, more leaner, and they can respond to market issues more rapidly. And that also has to do not only as a result of the recession that we're in, but also because we're moving to IP. And IP, the whole theme of this conference at PTC is about these applications, and the future of communication is all about applications. And then the other segment of telecom is really dumb pipes. And the carriers, they don't want to be just dumb pipes. So in order for that, they have to completely restructure, retool their organizations. Kind of similar to what's happening in Detroit, where they're not competitive, and now they have to be competitive.
Now, actually, the interesting thing about your business is you're sort of at the intersection of TDM and IP because there's a shift going on. So your business, in fact, is probably still growing, recession or not, because people are shifting from the one legacy technology to IP forms.
Yeah, in particular, like the VPF, we sit at this nexus, if you will, of all these traditional carriers and new telecom-based carriers, or the Web 2.0 type carriers. And so, what we provide is really an interconnection mechanism, for the old to new or the new to new to be able to exchange traffic. And so, what's great is that it provides them a way to not only exchange traffic on an IP basis, directly, eliminating the PSTN or TDM technology, but to the extent that they need to interface with the TDM side of the equation, there's tons of traditional wholesale carriers where they can dump the traffic to and get access to the PSTN. So it's been an interesting tool used as a way to migrate, from TDM to IP. And so they can play in both worlds. Because at the end of the day, when you're putting communication services, users expect to be able to communicate with all users, whether they're on the new network or the old network. So.
Well, let me guess, in summary, 2009 looks pretty good for stealth.
Yes, we're really excited about this. So yeah, I mean, even though in a recession, it does not feel as a recession at all for us. And I think for many of them, I think more than anything else, it's just an emotional tie, you know, just based on what's happening in the media.
Great. Thanks for being here, Shrihari.
Thank you.
And thanks for watching.